And welcome back. I noticed that Fannie Mae just announced today their latest housing market predictions through, and wait for it, 2024. This is the first housing market predictions I've seen through 2024. Of course, they provide some projections for the rest of the year 2022, but also 2023. So I have a lot to share in today's video. Let's go ahead and dive right in. I want to share with you guys the latest housing market predictions from Fannie Mae. So let's go ahead and dive right in. And they posted this on November 21st. And here's what they had to say regarding home sales, home prices, and of course, mortgage rates as well through 2024. This group, which is their ESR group, which by the way, that stands as the Economic and Strategic Research Group, or their ESR group. This group by Fannie Mae is forecasting for total single-family home sales in 2022 and 2022 are projected to be 5.67 million and 4.42 million respectively. And this includes existing home sales plus brand new home sales. So in 2022, about 5.7 million, and in 2023 at 4.4 million units for total home sales. And by the way, for 2021, there was 6.9 million total home sales in the US. And Fannie Mae is projecting that in 2024, total home sales are going to increase by 18.6% compared to the previous year. And this 18.6% in total home sales compared to 2023 is due to a modest pullback, or anticipated modest pullback in mortgage rates, the broader economic recovery, and a continued lack of housing supply that should support new home construction in 2024. And it says here a significant contributor to their negative view regarding home sales through 2023 is due to the so-called locked-in effect, which I talk about all the time on the channel here. Of course, there's a lot of a big disincentive for people to list their house for sale if people have rates of less than 5%, for example, when rates right now are around 7%. So because there's so many mortgage holders that have rates well below current rates, that's de-incentivizing people to list their houses for sale. And check this out, because this is actually a really interesting stat they pulled here. As of the end of October, more than 80% of borrowers had a mortgage rate at least 200 basis points below current rates. So 200 basis points means 2 percentage points less than current rates by the end of October. By far the largest share in decades. So let's have a look at rates as of October, according to Freddie Mac. So as of October, according to Freddie Mac, average 30-year fixed rate mortgages was at 6.90% for 2022, which by the way, look at 2021, 2020. In 2021, average rates for the entire year was only 2.96%. And in 2020, it was only 3.11%. But this October, it's increased big time up to 6.90%. So more or less what they're seeing right here is that rates more or less at around 7% right now. Approximately 80% of people who have mortgages right now. This means more than 80% of people who have mortgages on their houses right now have rates at 5% or less than current rates at 7% right now. And that is the largest share in decades, according to Fannie Mae here. And because so many people have rates of less than 5%, of course, that's one reason why we're seeing a decrease of new listings hitting the market. And according to Doug Duncan, who's the Senior Vice President and Chief Economist for Fannie Mae, he stated the following: "The economy continues to slide toward a modest recession here, which we anticipate will begin in the new year, with housing leading the slowdown. Higher interest rates have ignited the typical reduction in residential fixed investment." In other words, a decrease in home sales, which historically has led into either an economic slowdown or recession. However, though, they do believe that this recession, though, is going to be a brief one. And according to Fannie Mae, their home sale forecasts for 2022 and 2023 are essentially unchanged from their forecasts that they posted last month. Home sales are projected to hit a trough, though, in Q2 or 2023. So they're forecasting that home sales are going to reach a low point in Q2 of 2023 as the full effect of higher mortgage rates and the projected recession take a hold. They also talk about mortgage rates and how those have been increasing so much this year. Again, rates right now are approximately 6.6 to around 7%, and we started the year at 3.3%. It also says here we haven't seen the full effects regarding these rate increases on home sales just yet. They also talk about rising mortgage rates in October here. And it says the full effects of these rate increases on home sales have yet to be felt. I always talk about this because the stats we have for home sales, home prices in November and December are really going to be impacted by these rising rates of about 6.6 to about 7% plus. It says affordability measures are strained, which we expect will continue to limit home purchases by first-time homebuyers. They talk more about this lock-in effect amongst current homeowners who don't want to give up their historically low rate and take on a mortgage rate well above the current rate. And Fannie Mae says their rather bearish outlook in 2023 for existing home sales are now projecting the lowest annual pace since 2008, which is in part driven by this dynamic here due to this lock-in effect. In other words, because of this lock-in effect we have right now, that's going to be decreasing the amount of people listing their houses for sale. And therefore, we're going to see a big decrease in existing home sales in 2023. And according to Fannie Mae, they're projecting the lowest annual pace of home sales in 2023 since 2008, which is pretty remarkable. They also say, based on their analysis of historical Fannie Mae loan book data for 30-year fixed-rate mortgages, more than 80% of existing borrowers or existing people who have houses right now with mortgages have rates at least 200 basis points lower than current rates as of October. And on top of that, more than 90% have mortgages at least 100 basis points lower, or at least 1 percentage point lower than we have right now. So based on rates for October, this is what it looks like. This means approximately 80% have rates at or below 5%, and approximately 90% of people who have mortgages right now have rates at or below 6%. And again, this is by far the largest share since at least 2000, and likely the largest share since the late 1970s. They also talk about their forecast for mortgage rates here as well. It says we're forecasting mortgage rates to pull back somewhat over the next 2 years. This is partially reflects a view of moderating 10-year treasury rates as the Fed eventually ends its tightening stance. We believe this should eventually help spur a rebound in home sales. I have a lot to share regarding this here in just a little bit because I'm going to show you guys a summary regarding their latest housing market forecast through 2024 and their predictions for mortgage rates as well. So definitely stay tuned for that here in just a little bit. Fannie Mae also provides some real estate market predictions for brand new home sales. It says in the near term, we expect new home sales to continue to slow. We anticipate more aggressive discounting and incentives going forward as home builders move to try to sell brand new houses to home buyers. Therefore, we project new home sales to hold up well compared to existing home sales in the coming quarters. They also talk very briefly regarding multifamily housing as well. It says multifamily housing metrics, which had previously shown a surprising resilience, are now softening, with rent growth slowing and vacancy measures beginning to tick up. Therefore, their forecast for multifamily housing starts is to slow over the next year. We forecast multifamily housing starts to fall by 29.3% in 2023 after rising 12.9% in 2022 to the highest annual pace since 1986. So here's a summary for you guys regarding housing starts, home sales, home prices, mortgage rates, and much, much more according to Fannie Mae for November here. And they provide a lot of interesting insights or predictions through 2024. So let's first talk about housing starts, which of course is single family and of course multifamily. And by the way, these housing starts are seasonally adjusted annualized rates right here. So have a look at this. 2021, there was 1.6 million housing starts in 2021. 2022, they're calling for total housing starts to decrease by 3.5%. Look at 2023 though, declining by 26.4%, which is led by a giant decrease of both single family down by 24.8% and multifamily housing starts to decrease by 29.3% in 2023. So housing starts decreasing big time in 2023. But look at 2024, and I have a lot to share regarding 2024 because a lot of these metrics for 2024 actually do not really agree with them regarding that based on their forecast for mortgage rates. And I'll share that with you guys here in a little bit. But look at 2024. Total housing starts to increase by 8.6%. That's led by single family housing starts gained by 15.8% on a year-over-year basis, whereas multifamily declining by 5.9%. So let's briefly go back to single family housing starts because in 2021, again, that increased by 13.8% on a year-over-year basis. But 2022, their forecast for the remainder of the year is calling for a 10.4% decrease for the year compared to 2021. And then 2023, decreasing by about 25% before increasing by about 15% in 2024. Also, total home sales, there was 6.9 million in 2021. That was up by 6.6% compared to 2020. But look at 2022 and 2023, declining by double digits on a year-over-year basis here. Whereas in 2024, calling for a 19% increase compared to 2023. And new single family houses declining by about 17%, both in 2022 and 2023, whereas in 2024, increasing by 23.5% compared to 2023. Existing home sales. So again, as you guys all know, if you guys follow the channel, in 2021, there was 6.1 million existing houses that was sold for single family condos and co-ops in the US for 2021. And that was an 8.4% increase on a year-over-year basis. But their projection or their forecast for 2022 and 2023 to decline by double digits, whereas in 2024, existing home sales increasing by 18%. In regards to home prices, have a look at this. Here's their HPI or their Fannie Mae HPI, which is their home price index, which of course is an index which measures home price changes over time, right? Look at 2021. Their HPI increased by 18.9%. Their forecast for 2022 is a 9% gain from 2021. Whereas in 2023, they're calling for home prices or HPI to decrease by 1.5% and more or less the same in 2024. Now let's have a look at mortgage rates because here's our forecast. So for 2021, again, the average was at 3%. For 2022, they're calling for the average for the entire year to be 5.4%. But look at this. It's just kind of like laughable. Anyways, 2023 is 6.8%. And 2024, they're calling for the rate or the average rate for 2024 to be 6.1%. And this is really where I'm kind of scratching my head regarding this because at a high level overview here, if rates decrease from 6.8% down to 6.1%, is that going to cause a lot of people to, run into the streets and buy houses like crazy? For rates to decrease from 6.8% down to 6.1%, where back in 2020 and 2021, rates were averaging at 3%. So I'm really laughing inside here, and I guess out loud too as well. When they're calling for rates to decrease from 6.8% down to 6.1%. So because are forecasted to decrease by 0.7 percentage points, they're calling for home sales, housing starts to decrease or increase greatly. So housing starts, again, increasing by 15.8%, and total home sales increasing by 18.6%, and new single-family houses increasing by 23.5%. And of course, existing home sales increasing by 18%. So I'm really kind of scratching my head regarding this is that, do you guys really think that if rates were to decrease from 6.8% to 6.1%, do you think that buyers are going to flock and buy houses in droves? I really don't think so. I don't really see that we're going to see a 19% increase in home sales if mortgage rates only decrease by 0.7 percentage points. Now, what do I know though, right? What do you guys think about this? Please leave me a comment below. I think they're being overly ambitious in their forecast for home sales as well as housing starts if their predictions for mortgage rates is right, declining only to 6.1%. Anyways, let me know what you guys think about that. They also talk about single family mortgage originations, and these are in billions of dollars, by the way. So purchase applications, or not purchase application, purchase originations to buy houses was $1.9 trillion in 2021, whereas their forecast for 2022 is only 1.64 million, and a big decrease in 2023, but a modest increase in 2024. What's also pretty remarkable, just out of curiosity, if you guys are interested in this, look at refinances. In 2021, which again, this is 2021, the white bar here. In 2021, there was $2.67 trillion of mortgage originations for refis. But look at this, 2022, only $699 billion in originations for refinances. And that's a decrease from a share of refinances from 58%. This means out of all the single family mortgage originations, approximately 58% came from refis, and the remainder were from purchases in 2021. But look at 2022, a decrease to 30%. Then in 2023, the share had decreased to 22% of all mortgage originations. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.